Hello everyone, I'm Googol. This is the first webinar of Googol's Forex EA channel in English. Today I will show you my design, the Black Semi-Automatic EA. To avoid speaking mistakes, save our time, and speed up the webinar, I will let the Lady Googol to read the most paragraphs for us.
The Blade Semi-Automatic EA is a powerful tool to help you to win the trade easier and save your precious time for your manually trading. Most of time, we human have better feeling to see the chance to enter the market because our brains work with instincts and we have some experiences what the machine cannot mimic exactly. But the way our brains work have the disadvantage in the same time. We will get emotional when we feel tired. And you know how easy and how short time we human feel tired, especially when we are doing some nervous things like trading. So this EA is designed for such purpose. Let you do your good part and let computer do the rest part we human are not good at. Before we start to present the details of this EA, you have to know the concept of Fibonacci retracement for understanding better how it works. The Fibonacci retracement was developed based on Fibonacci sequence. The sequence are a series of numbers to solve the question, if you got a pair of rabbits today, how many rabbits will you have for 1 year later? The Fibonacci sequence was invented by an Italian mathematician named Leonard Fibonacci. The most famous thing about the Fibonacci sequence is called golden ratio, i.e. 1 to 1.618. If you pick one number in the Fibonacci sequence to divide its previous number, the result will be very close to 1.618. But you may be curious, why? What the part about my Forex trading with the rabbits? As Googol's understanding, we traders just act like the natural phenomenon of rabbits breeding. Just don't think it too complicated. You can imagine they open lots as the rabbits. For example, on the screenshot, the trend goes from the lowest extreme position to highest extreme position. That means there are the largest amount of rabbits on the line of 100%, and only 2 rabbits on the top line of 0%. We traders always follow an uptrend to enter the market with buy orders until all of us feel the price is too high. That's why Googol think there are only the last 2 rabbits on the end of a trend. After the trend reached the highest extreme position, it is about 80% probability the trend will retrace back onto the line of 38.2%. The retracement going back to the line of 38.2% is the key point. We want to take the advantage of Fibo lines. Since the sellers will enter the market, or some prior buyers want to close their orders on the top 0% of Fibo lines, it always brings the trend back to the line of 38.2%. So that the basic concept of Googol's Blade Semi-EA is doing the right thing to help you to benefit during the retracement. Having basic understanding about using Fibonacci retracement, now we can trade with some ideas. The target is trading during the period of 1 day only. No, let the risk grow for longer time. So we just want to enter the market at 2 positions of 1 market day, sell at the day high, or buy at the day low. That's like hunting whales. We human find the opportunity to trigger the first shot, and the robot following our command to beat the whale until the job done, and we got profit to exit the market. Behold, the most important idea of the late SEMYEA is PPW. Google named it as pull win. Everybody knows the best trader will sell on the highest position, buy on the lowest position. But actually, no real person can do such thing. Only the God can do. On the screenshot, maybe even the best trader will think it is the lowest position of current day. So he feels this is an opportunity to trigger the first shot. Usually we enter it with a buy order and hoping the trend goes up like we expected, but who knows? Only the God knows. If the trader is very lucky having the God blessing, the trend really retraces back from the bottom 0%, then he already win the trade. If the trader is just like you and me, the trend tricks him badly, and the trend goes further the same side to extend the Fibo pattern, what we can do? The fact means there are still a lot of rabbits on the market. The trend is not at the extreme position yet. So, if there is no EA to help, just you can do by yourself, you must be careful at current phase. Maybe there are still tons of rabbits, wanna sell orders like crazy, and pushing you near the stop out position. In that case, maybe even the Blade Semi-EA, or any other EA, can do nothing for you, too. Just like the high-impact news event time, rabbits jump insanely. Only you can do is to close your order at stop loss or just let your account get stopped out. But if you didn't suicide to enter the market before or during the news event, in most of market time, we can expect that the trend will retrace back on the line of 38.2% with an 80% probability. The only problem is the first shot did not get a good enough position. Let Google ask you one question. How can the trader do to make himself win with profit when the trend really goes back the line of 38.2%? You can see the price label of BEA on the screenshot. That means break-even price of all orders. The idea is so simple even the trader with the least of experience can understand. If the bid price goes higher than the break-even price, then his buy orders is in profit. So all we need to do is let the price of the 38.2% line keep higher than our break-even price of buy orders. Then if the bid price retrace back to the line of 38.2%, all of buy orders are in profit. That's the exact meaning of pull win. Let the robot always open other buy orders to pull the break-even price falling into the area between the 0% line and 38.2%. The clear logic is only when the Fibo pattern enlarged, and the 38.2% line move cross over the break-even price, then the robot pull the break-even price once. This make the particular difference with those stupid martingale account killers. Google's Blade Semi-EA only do something when it is critical necessary for you. Setting the target of take profit on the 38.2% line is just for example, because there are 80% probability the market always retrace back to this line if the Fibo pattern was formed definitely. Actually, you can have your own setting on other Fibo lines. However, the result we want, and the Blade Semi-EA can do is to make us in profit when the trend retrace of target line we had assigned. Although this idea sounds very wonderful, even just like some trader said his hedging method is paradise, Google will still not tell you trading as this way is totally no risk. That's impossible trading by any method with zero risk. But Google could remind you something in following pages to lower down your risk. First of all, maybe some traders had ever told you news trading is easy and fast money for them. But they did not tell you another truth. How easy and fast you can make profit means how easy and fast you can blow your account in the same time, too. When the high-impact news event coming, not only the institutions will take advantage of we retail traders, but also your brokers and liquidity providers will play dirty tricks on your trades and your accounts. They enlarge the spread to wipe out all of your buy and sell orders. And those very long-term traders close their orders which are already in profit with over hundreds, even thousands pips for long time, too. Because some retail traders think themselves as the lucky gamblers will send their money to the big whales happily by themselves when the news coming. News events never be even close a little bit impact to those accounts owned by big whales. But being their hunting season for eating all retail traders cooperating with brokers and liquidity providers, then tell you. It's the market did. If you are a retail trader and trading during the news events, you are just making your account as convenient foods to feed those big whales. So Google suggests you never trade nearly or during high-impact news events except your account is big enough as those whales. For the traders using the techniques based on Fibonacci retracement, news events are not a good time to trade particularly, no matter you have this blade semi-EA or not. And, yes, if you have this blade semi-EA, maybe it will help you a little bit with the reacting speed, but still not guarantees that you can win the trade during high-impact news events. The second function of the blade semi-EA will help you to see the high and low extreme positions by these star marks signals. Blue stars will appear when the price reached recent low position. It could be the day low, which is a good chance to buy for your first shot. Depends on what time frame you had chosen to run this EA. If you just want to enter a short-term trading, star signals may be not the extreme positions of a day, but could still work fine enough on the chart of shorter time frame. The red stars represent the recent high position for your reference to decide to sell or not. The third key point, Google called it as high probability range. As we know, the strength of any symbol in the Forex markets will have a rough range of momentum every day. For example, the recent average momentum of the currency pair EUR/USD is about 770 points. So what's the meaning if the price have moved for some distance and caused the candle length of current day is larger than average momentum? The simplest analogy is the big whales had swam far enough and could be tired already. If the current price is near the highest extreme position of current day, the most possible thing will happen is it will retrace back any time. That's the reason it's named as high probability range. If the price is in some range where it's just near the highest extreme position or near the lowest extreme position, it will retrace back with high probability from the top to lower position or from the bottom to higher position. The fourth important thing is a statistical phenomenon. According to the candle data of past years, the highest and lowest extreme positions will appear in some hours with about 75% probability every day. Google named it as golden 6 hours. Blue or red star marks which appear nearer during these 6 hours will be more reliable and having higher probability to indicate out the positions of day low or day high. It will help you to sell on the highest position or buy on the lowest position of current day. The most important thing is the fifth point. Successful traders will never enter any trade when the market does not have enough momentum. The Alchemy provide the automatical Fibonacci retracement drawing function. You can see how long does the whole Fibo pattern had formed. The robot will show you the estimated profits on each Fibo line, which are calculated by points and cash. By these pieces of critical useful information, you can see the momentum of market clearly. You will be able to plan your trade, included entry position, exit position and trading period before you really trigger the first shot. Let's sum up the simple conclusion. All you need is a simple trading plan about total orders, total lots, profit target, stop loss position before shooting the first shot. Then let robot takes over to manage all orders and patches additional orders when necessary only. Just don't enter any trade near or during high-impact news events.
And be patient to wait the extreme positions appear in some particular periods of time in current day.
Of course there are about 75% of time the market's being consolidation. That's the sweet point. Just we want to trade with skills based on Fibonacci retracement. But what if the markets are undergoing the rest 25% of time? No matter how we don't like it, we could never avoid to talk about the risk part of our trading plan. A simple name, swing traders, can apply to we traders who are using such Fibo lines skill. The traders on the opposite side will be named as breakout traders. The rest 25% of market time we swing traders don't want to enter any trade is just the opportunity that breakout traders are waiting for. Markets are fair enough to blow up accounts of the breakout traders, or trap them, if they had entered at the wrong positions and the trend went to the wrong side, or just swing like forever. So the breakout traders need to do first one important thing: don't do any trade when we are making profit. The second important thing is the same with we swing traders: let the risk be under control. In fact, when the trend going to the wrong side, it hurts all types of traders. That's why almost everyone who just entered the Forex markets had asked one question: how to set the stop loss. There is a simple, suitable solution to control risk for the trading skill what Googol designed within the Alchemy. This is the oldest but useful principle. Never put all your eggs in one basket, because the robot will patch additional orders to make sure you are in profit when the trend retraces back to your target exit Fibo line. It will be a little hard to predict how many lots it will use. So you can limit the robot with fixed setting of total orders amount or lot amount, and use the stop loss setting in the same time to make it safer. But Googol recommend you another simple way: always put 1% only of your total fund in your trading account. It will build up a safer and most high-efficient environment for the robot working. With the fund-divided trading account, you don't need to limit the robot using how many orders or lots. The worst scenario will be you lost just 1% of your fund when the account has been stopped out. If you don't use such physical stop-loss method to control your risk, but just using stop-loss setting on your orders, then you may lose more fund, even get your whole account blew up when the brokers or liquidity providers are playing dirty tricks, or when you were hit on price gap, which is caused by some black swan. Perhaps some traders are thinking 1% of fund is very hard to make enough profit and could be stopped out very easy, too. But let's consider the details carefully. If you can flip 1% of your fund to double 2%, such as from $100 to $200, what will happen if your trades are based on the account within $1,000, even $10,000? And you cannot ignore the other truth. If you always lose 1% of your fund, why do you think you will make the result different when you bet more on like 50% of your fund? If you are the winner, it's no difference of how much percentage of your fund throw in each trade, you still win. But you had better to be sure you will win before you enter the trade. Most of losers are always dreaming about to win the biggest one prize from the markets, then they don't need any other trade in their lifetime. Since they do not have the skills and some good tools helping them to win, the trades are always boring and high pressure to them. So losers are awaiting lucky money like a gambler. Actually, they like gamble but not trading any financial product with their sense of brains. If you are that kind of gambler, all you need is tons of fund and one little coin only. Just let the coin decide to buy or sell, sitting aside and watching the markets blow up your account or multiply it. You don't need watching any webinar or reading any article more to pretend you are learning. The win rate of a coin could be better than your interference. But if you really care about how often you will win and want to grow your account up step by step, then here are 2 ways for exit to let you maximize your profit and reduce your loss. Google call them rule of GGYY and function Z2N.
Sorry.
The GG means good game. When an esports player lost a fight in some game, he may say it out. There you can guess out. YY, it is the cheer when you have win any fight, and yell loudly, yay yay. Rule of GGYY is simple enough, using some percentage of your fund in a separated account to trade, and win it to double or even more. In the same time, it controls your risk to lose the definite percentage of your fund only. How much percentage of your fund to put in another separated trading account is depending on how much to lose. You will not feel hurt, but maybe a little prickly. The purpose is removing your fear to lose. If to lose 1% of your fund will not hurt you, then it is the proper number to put. If 10% of your fund loss is still only little prickly to you, then 10% is okay, too. The most important thing is that you will still have the courage to trade again, even if the whales on the market swallowed those fund of yours. But you will not be involved with some emotion, losing your mind and doing something stupid, like to bet all your properties on one trade just for one time of revenge. And you must know the game rule of stop out. It will take down your trading account only, no influence of other accounts as vault. That means, even the most evil broker wanna play dirty tricks on your trades, they can only take down a little part of your fund. You can withdraw all out if you have found something wrong. But they are greedy enough will not let such thing happen. Then they may not choose to do bad thing on the trading account, which has only some percentage of your fund. A good idea for traders is, let the profit run when you are on the winning side. Traders who have not much experiences will always close their orders on the time they just got a little profit. We all know about that is sweet. If we give it some time, the profit may grow up to amazing amount. But why? Why do we always do the opposite things that against our knowledge or instinct? That's caused by the fear from being float loss for a long time. So we want to get out of the trade, just like being in the darkest long night and seeing the first sunlight on the dawn. Don't feel shame with your natural reaction. Actually, the winners' behaviors are just the abnormal ones. The winners want to stay in dark fear. Ignore the possibility of the trades becoming loss again. That's such weird thing in whole universe. But that's exact the reason why the winners win. And the exact reason that losers can only get tiny profit, too. So can we just do nothing to become winners except to disobey our common sense? No. The Z2N function designed by Google in the late semi-EA could fit the solution to keep your toilsome profit longer on the first light of dawn. When your order sets start to get some profit after bare long time of float loss, you can use the Z2N function to close some orders and keep the others which are in profit. For example, there are 5 open orders. You want to hold 2 orders and close the other 3 orders. If those 3 orders have profit $10 and current price moved crossover assigned Fibo line, then the function could be executed. The most far 2 orders from current price will be held and set stop loss at break-even price respectively. What advantage the Z2N function will bring to you after it executes like that? First, those closed orders are break-even or had some desired profit you assigned. So you have this part done, just like our common sense will make us do. We close orders when they just have some little profit. But the second part is so wonderful, like those winners will do. We left some orders be still open on the markets which are the farthest from current price and already having much profit. And because the left open orders have been set stop loss at break-even positions, so you will not fear those left orders will lose your money when you don't focus on them. You will be happy to see those left open orders already have profits just like those winners' orders, so you will let the profit run without fear anymore. There is a demonstration video clip on the channel of Google's Forex EA. You can watch it to know about more detail. We had talked about the importance of high probability range in the prior paragraph. If you don't want to know about the details of HPR, the colors shown on the text of HPR must be useful enough to let you judge if the price is in HPR and will retrace on any moment. If you are curious and want to know about it more, the PDF file will be ready for download after our webinar. On this page shows you the meaning of each number, getting more deep understanding. You will be able to estimate the strength of momentum on current day, and get more clear vision for your trading plan. The golden hours we had mentioned about is 2 periods of time on every day. The first period is UTC 9 o'clock in summer, or 10 o'clock in winter, to 12 o'clock in summer, or 1300 in winter. This period is better time to trade because the markets have more momentum. The second period is UTC 1500 in summer, or 1600 in winter, to 1800 in summer, or 1900 in winter. The markets on this period will have less momentum than the first period, but still have some opportunities to trade. Please be advised the time zones of servers are different of every broker. You had better to ask your broker to know what is the exact time zone. Those following paragraphs are the details of parameters and introductions of panels for the Alchemy EA. Google doesn't think it is critical necessary to read them all one by one on the webinar. So let's pick up some important items to let you know how to use this EA. The parameter named as stop trade if spread is large, then this will let you limit robot not to trade when the spread is sudden too high, such as in news events. We know the spread going very high is just a temporary dirty trick of brokers and liquidity providers, so we don't need to trade during those moments with higher risk. Usually, spread will come back to normal spread just in few minutes, even seconds only. The parameter named as max base lot limitation is for you to limit using lots for your first shot. Next, important parameters are named as base lots using percent risk of balance and fixed lots. They are working together. If the value of fixed lots is 0, then the robot will calculate lots of trades by the setting of base lots using percent risk of balance. Base lots using percent risk of balance means the robot used the margin per lot to estimate using how much lots of your first shot by the risk value set. The next lots factor means how much to multiply previous lots for next order. For example, if the next lots factor is 1.0 and you prepare to use 0.25 fixed lots to trade, then every order will be 0.25 lots in the whole round. If the next lots factor is 0.0 and your first order using fixed lots is 1.0, then the following orders will use lots as 2.0, 3.0, 4.0, etc. until next round to reset it. But if the number is others like 2.0, and your first order using fixed lots as 1.0, then the following orders will use lots as 2.0, 4.0, 8.0, etc. until next round to reset it. There is a special parameter, virtual stop out level or money. You may not ever see it in other EA. Every broker has its own stop out setting, such as to close your orders which have the largest loss first. If it could still not available to let your account alive, then the server will close other orders which are in loss until your account is safe. Other stop out mode may close all orders no matter how many orders or have some profit. Because the stop out level setting are different in different brokers, the result of stop out will be different. 2. With some setting you will keep almost half or even 80% of your fund, but some setting will wipe out all your fund. Maybe you want to have your own setting to keep more fund, but not to blow up whole account by current broker you are trading with. Then you can set your own stop out level to simulate the better result like other broker. You can use the Alchemy EA for free if you join Google's IB plan of Global Prime through the IB link and fund your account with $500 or more. Or just purchase it for $50 to use it on your first broker. And if you want to use the CA on other brokers, just $20 United States for each broker from the second one.
Let's repeat this page again.
You can use the Blade Semi EA for free if you join Google's IB plan of Global Prime through the IB link and fund your account with $500 Australian dollars or more. Or just purchase it for $50 United States to use it on your first broker. And if you want to use the CA on other brokers, just $20 United States for each broker from the second one. The following paragraphs are too long to read them in this webinar. You can download the document from Facebook group of Google's Forex EA, or Google will put the PDF file in the zip file, too. There are some short video clips on YouTube channel of Google's Forex EA to show you details of some functions. You can find out these video link in the PDF file, or just watch them in the video list on the YouTube channel. Lady Google has done the job here. Let's navigate you to the final page, and let Google to end it for you.
Okay, thank you for watching. If you have any question, please do not hesitate to contact me by Telegram or Facebook fans page. I can give you a free and no-limit trial license code to use the Blade Semi EA for 1 week. If you want to take a look before purchase. Hope you like it, and see you next time. Bye bye.